FX Nation, what's up guys? Welcome back to the channel, welcome back to another video, and welcome to the last video of the week, and where we will go ahead and just give a quick review of essentially what's happened throughout the week. Alright, so we've been following Euro Pound and Pound USD the entire week, going over the data as basically every day is, we get new data. So Friday, final day, as we talked about yesterday, it could have gone either way on Pound USD. Luckily, though, we ended up getting a very nice trade during the New York session, clear type 1 setup that was basically pinning to yesterday's low. Now, there were a couple of other trades that could have been taken as well. One would have been a type 3 setup out of London, and it would have looked like this essentially. So that this one was another setup as well. I don't think a lot of people would have caught it though, but it was definitely there though, because you had basically a sharp move down, sharp move back up, railroad tracks right there in the middle of the range, also pinning to the 50 EMA, to the 800 EMA, and then almost to the 200 as well. So railroad track pinning to the middle, and then also to all the EMA. So that was definitely a good good confirmations there of an actual trade. And you can see basically on the TDI as well, as we bring that in, you basically had an M formation here pinning to the 50 as well, to the middle. So all that into play, you have pretty much a lot of different forms of confirmation that you could have used. If you're looking at this one here for the US session, obviously type 1 setup pinning to yesterday's low, and then also second leg railroad track here as well. You also do have a higher high created on the TDI here as well as it's going up. So either trade gave out 30 pips easy. So those were two setups that were available on Pound USD. And again, Pound USD could have gone either way because it's in an accumulation cycle. So it's literally, as you can see, it moves basically between support and resistance. Now, if we take a look at the trades that were actually available that meet our requirements essentially for trading, right? The entry rules and all that stuff, right? There were still trades here, even though it's an accumulation cycle. Okay, the patterns are still there, and you have tradable trades that are here, even though you had an accumulation cycle with the EMAs going straight through it, right? So you can see you had 1, 2, 3, 4, and if you count the one with the type 3, would have been 5 trades on one pair in 1 week in a crappy accumulation cycle. So not too bad. Okay, not too bad for being an accumulation cycle week, and and not having that much movement in either way, because it was basically in a range of about 150 pips, back and forth, back and forth, back and forth. And you can see the last 2 days really tighten up. It didn't make it all the way to the bottom, and it didn't make it all the way to the top. Okay, so there is definitely going to be a breakout that is going to happen on Pound USD. That is without a doubt going to happen on Pound USD. You can definitely count on that happening. Whether it happens next week or whatnot, I don't know. We will have to find out and see. All right, but that was on Pound USD. Now let's take a look at Euro Pound. So let's take a look at what happened on Euro Pound. So we talked about this one last night, and Euro Pound here, when we talked about it, was still building out the Asian range here, right? And we talked about if this price action basically stayed down here, we could potentially get a type 3 to sell, right? And so what happened, right? What ended up happening is price action didn't stay there. As you can see, during the Asian range, price action just shot up. It literally just shot up. All right. Now, what it did was it did go ahead and pass yesterday's high. Okay. And I believe also the previous high of the week, which was on Tuesday, which was set right there on Tuesday. Okay, so what does that mean as far as the cycle goes? Because up until, yesterday, we were expecting a sell because we thought this was going to be the midweek reversal here, and we would get sells and would possibly go to the maybe 800 or even lower, right? But that didn't happen. So what does that mean as far as the cycle? As far as the cycle goes, because that behavior didn't happen and it shot up and it basically created a higher high here. Okay, so think of this here as a higher high. Think of this as the higher low, right? And then this now basically is a trending cycle for the week. Okay, look at the EMAs. Basically stayed. The 200 stayed right there above. The 800 came above as well. So price action stayed above both the EMAs. On a market maker cycle, you would typically have that move down that we were expecting, right? Would have basically moved all the way down, and obviously then you would have had the EMAs above you at that point. Okay, but that didn't happen, and that's what it is. It is what it is. So how does this change essentially your perception of what's going on? So here's what I think one of the biggest mistakes that a lot of retail traders do. All right. And so this is a behavior that you have to learn to stop doing. So if you are a retail trader, right, and you're new to trading or even been trading for a while, what do retail traders do essentially when they see this behavior here, this move start to go up? When they were expecting, right, let's say a move down, and let's say a pin to the 50 or the 200, and then a move down possibly to the 800 or lower, and that doesn't happen, what happens? How many retail traders start to freak out over it? And they don't understand why it's happening. And they literally start to freak out. And so what happens is they see this move here, and then they get FOMO, right? Fear of missing out. And then they just jump in on the trade, right? Because they don't want to miss out on the trade. Okay? So this is one of the biggest mistakes that retail traders make. Why is that? Because if you do this, if you jump into a trade randomly because you have a fear of missing out, yes, you would have caught a great trade. Absolutely. It would have been in your favor this time. But if you keep doing that behavior, and you will, what's going to happen? You get maybe 4 or 5 of these that you win in a row. You get real confident, real cocky. And then you start putting on more lot sizes because you think you know what you're doing. And as soon as you do that, you get that one loss. Basically, that takes away all of the gains that you just made by doing these trades here like that. And so why does that happen? I think a lot of times it happens because as new traders or as retail traders, you guys don't have a plan. You guys don't have a trading plan. And if you do have a trading plan, how many of you have actually back tested the plan so you know what it actually outputs over an extended period of time? Meaning, have you taken that trading plan that you wrote down and actually went back into the charts, let's say starting from 2016, 2017, or 18, and actually back tested the plan to see what it would output over a 2-year span? How many of you guys have done that? And just be honest with yourself. So you may have a trading plan, but have you back tested that trading plan to know whether it's an actual good trading plan or not? Because just because you have a trading plan doesn't mean that it's actually a good one. You only know if it's a good one if you actually backtest it and you know what it's going to output over an extended period of time of 2 to 3 years of backtesting. And I mean going back into the charts from like 2016, 17, 18 and replaying it and seeing how many trades, what's the win, what are your win and loss percentage? Is it an 80% winning, percentage plan? And so the reason I say that is because if you have a plan that, let's say, for example, wins that that you've back tested and that wins about 80% of the time, 75% of the time, if you just follow the plan, everything that's on that plan, okay, if you follow the plan, over an extended period of time, it'll give you 75% wins. If you know that, why? And let's just say that you trade how we trade here with type 1s, 2s, and 3s, right? Why would you worry about this trade? Why would you worry about missing out on that trade? One trade on a Friday is not going to make or break your account. Okay? One trade on a stupid Friday, who cares? It doesn't matter in the bigger picture of things. It's just one trade. Next week, there'll be more trades. Week after that, there'll be more trades. Next month, next year, there are always going to be trade opportunities. Okay, so you can't tell me that if you were following this pair expecting a sell, right, and you didn't get that behavior, you automatically just jump in because you have a fear of missing out on this trade. And yes, in this time, it would have worked out if you would have jumped in, but was that part of your actual trading plan? And if it wasn't part of your actual trading plan, then what the hell are you doing? You're just gambling at that point. You're literally just gambling at that point. If you would have waited for the trading plan to come into play, you would have had a trade in the US session that you could have taken. It still would have given you about 17 pips. But I mean, at the end of the day, if this is not the only pair that you have opportunities to trade. So if you go through the other pairs that you're watching, let's say Euro JPY, you can't tell me that there's not a better trade setup on Euro JPY as a type 2 setup right here to give you well over 50 pips. You see what I mean? So getting hung over on just one trade that you missed out on that just went, in the complete opposite direction of what you thought it was originally going to go to, and you jumped in on it because you had a FOMO or fear of missing out, that doesn't make any sense for you to do that. Look for the other pairs that you follow. Here's a trade right here, type 2. Nice, beautiful type 2 trade that gave you well over 50 pips, or about 50 pips on the trade. Here's another type 3 trade right here. Pins to the 50 right here in London. I mean, look at the TDI right here. I mean, there's multiple trades that were available. So that's not just the only trade or the only pair that was available to trade. And so just because one pair that you're expecting, here's my point about this. Just because this one pair that you were expecting, to do something and it didn't do it, so what? Who cares? Like, the biggest difference between me and other retail traders is that I follow a very strict trading plan. And if I was expecting a type 3 to happen here and I didn't get that kind of behavior of what I was expecting, then why the hell am I going to trade it? If it's not in my plan and I follow a plan that gives me, let's say, 80% win rate over an extended period of time, why would I take that? It doesn't make any sense. So I hope that if you guys are trading, that you guys have a plan, most importantly, a plan that you've actually back tested, so you know that it actually works over a long period of time. If not, guys, you're just gambling at that point. And if you want to gamble, shit, just go to a casino at least you'll have fun losing money. You know? It's not fun sitting here in front of a computer screen losing money. At least at a casino you can be entertained. All right? So I hope that these videos this week has brought you new enlightening information, hopefully help you in your trading journey. If you guys would like to see this type of content next week, let me know in the comments, and let me know 2 pairs that you would like me to follow next week, and we can do this as well next week. All right? If you need any more help, we have a new class starting August 10th. The links are in the description. Guys, thank you so much. Enjoy your weekend and be safe.